All right, hey traders, TG Watkins here. It is September 21st. I hope you guys are enjoying the Earth, Wind, and Fire song. That was a fun one we got to play today. But wow, the FOMC day did not fail to live up to its crazy day. This is everything that we thought it might be, and it really was. And it was really hard to kind of withstand whatever was going on here. The day started out just mildly bullish, fine, whatever. That doesn't mean anything. And then the news came out. We were going to raise interest rates 75 basis points. And the initial reaction was immediately down. I'm showing you guys that the internals, the breadth and volume, all that kind of stuff. And that was immediately down. And then for whatever reason, maybe the algorithms and stuff like that, they saw that there was an opportunity because price maybe was oversold for the moment. And they ran it back up. And this was not a small situation. Like this was a lot of stuff that got moved all the way back up, because if we're seeing this in the breadth readings, it was a lot. And you can see we even made new high and big, significant like that. And then it just started to roll over and dwindle and dwindle and dwindle, and then got real heavy to the downside. So some pretty crazy stuff out there made it very, very challenging to work with this. The moves were nuts. And then once the dust has settled, the only thing I can kind of be looking at here is that it's essentially, it was a bounce right up into the underside of the hourly 50, which is something I've been talking about for a while. And also right here into the daily 8 EMA. Now, of course, we're thinking, well, did we just go and short this thing right here, right this moment? That's a tough thing to answer. I don't have exactly that answer. I am seeing that there are a fair amount of things that are oversold. And we can even see that, come when we had Friday, that there was a gap down. I think it was Thursday into Friday, there was a gap down like that. Well, the gap, the price, got that drop. And of course, it was option expiry. So it was a little bit, different on that day too. But then it kind of flagged and ran back up into that moving average and then rolled over. So as is typical of the market, we don't go straight down. So if you feel like you're a little bit behind the curve here, be careful about shorting something, say tomorrow or the next day, whenever you see this. And if you can, fine, day trade it, whatever, ride this thing for a while. But just know we might be getting into a situation where we should be expecting a bounce or a flag. Now, that doesn't mean I would go long on the bounce. I'm not looking to go long, but I do think it would mean that you could probably find better opportunities to short it, or just be patient and wait for those bounces to short into. But I do think we're going to be heading down. There's been talk about 3,700 easy. I think 3,700, it seems pretty reasonable. We might get a bigger bounce or some flag chop at that point. But then ultimately 3,400, I think, would be the next major target. So we'll have to see basically what path we take to get down there. But I do think ultimately that is where we're going to go. All right, everyone. Well, strap in, buckle up. Hope you're doing all right out there, and we'll see you at the next one. Hey, TG here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to leave a like or comment below. Also, make sure to subscribe and click that notification bell so you can stay up to date with my market analysis. Or you can join my free newsletter with the link in the description. Good trading, and I'll see you at the next video.